Nifty went on past the 24,300 resistance mark, but this mid segment was a different story altogether. Again, something that we've been speaking about for the last week or so, where there are some challenges around that space, and you want to stay nimble. The momentum indicators turned positive, bullish crossovers, but the PCR at 1.42, there is no chance that you would actually, or at least I would suggest going long at those levels. So for sure, you have to book profits today. Even if you open flattish or maybe slightly marginally higher, you have to exit. My concern right now remains in the mid segment. If you look at the Nifty mid cap 100 and the Nifty small cap 100, there is a rising trend line support which these indices are testing. Also the 20-day moving average, these supports coincide, by the way. If that's broken, the near-term trend perhaps could turn a little worse. So be a little cautious, be nimble, and as far as stock-specific action goes, you can perhaps either not trade or stay light. That's what I would suggest on the stock-specific front as well. So
do you have any picks today?
I do. I'm still going with just 2 calls instead of 3, and then even that has a short call in it. But like the ritual is, I'm going with a weekly pick being Monday. Again, if it opens in the negative, in the red, please don't go out and execute immediately, right? And that stock is Gujarat Fluoro. Again, we've done our diligence and we've done our research, but we've seen stocks behave funnily, right? There is good volume action, good price action. Even in the market like this, the stocks actually went on and moved past that resistance of 4100. So yes, for targets of 43.30 and 45.50 with a stop loss at 39.50, Gujarat Fluoro is a long call, weekly pick. On the short side, MFSL, this one has had a terrible week, closed below the 15.50 resistance mark. So on the short side, if you want to consider 15.15 and 14.90, these are your targets. 15.60 is where you keep that stop loss.
Okay, so that's with regards to your topics. Parag bhai, I mean, we can't not talk about the banking space today, right?
Yeah.
I mean, how are you looking at the performance of ICICI Bank? I think hands down on the positive side. But if you have to compare it to the other private banks also, how do you see Bank Nifty performing today then?
No, it is completely hands down, as you rightly said. And if you remember the day when first business update came, Axis and all, I said that in the end, we will see that ICICI Bank will emerge as a clear winner. And by God's grace, that has exactly happened. Full marks to Sandeep Bakshi ji and the entire team. Superb execution. In a quarter where cost of funds was going up for everyone, and so NIM declined by as many as 12 bips for someone, for 14 bips for someone. ICICI Bank executed so well that even adjusted for tax refund, NIM was up 1 bips QOQ, 20% loan book growth, and profit before tax, excluding treasury gains, which Mr. Bakshi ji focuses on, was up by 20.9%. So amazing. Fee income growth was 23%. And still, stock still trades at 2x price to book if you adjust for subsidiary value. And the ROA was 2.49. So it has to go to 2.5 if this war situation, today war situation is again bad. We are staring at oil at 90. So there might be some profit booking. But that profit booking should be used by the people who don't have. I have enough, but who don't have ICICI Bank to. I think it's the best way to play India's story, no doubt about it.
But there will be profit booking in other banks as well, right?
Yeah,
so what did you make of the others? Because none of the others showed NIM expansion. Axis, Kotak,
So
HDFC.
basically, if I remember correctly, in mid-cap private sector banks, Federal Bank showed NIM expansion of 13
no,
bips.
I was talking about the top cohort.
No, I'm saying, Axis, big fall. HDFC Bank, 12 bips was a big fall. QOQ NIM contraction. Kotak was 4.53, which optically was 12 bips down. But they said that in the base quarter, which is Q4, the number of days calculation was like that. So on a calculated NIM basis, Kotak was stable.
Okay, so that's on the NIM, but just on the final view on these banks, right? You keep frontline banks in one cohort and then all of the other smaller banks and NBFCs put together, right? You've looked at quite a few numbers over the weekend. ICICI Bank we've already spoken about. Is there anything else that you saw that was positive? Poonawalla was good.
Poonawalla, growth was fantastic, but the stock already trades at 3 times price to book. Plus, I would, as I always keep saying, in lending business, you should restrict your growth at 30%. More than 30%, it will be very difficult to digest.
Is there anything else that you liked And
so PNB was decent because the valuations are very attractive and the NIMs have bottomed out. So PNB can go up by 2-3% today itself, in my view. Anything else? Of course, I was disappointed with the Axis and HDFC.
So let me ask you this, right? You said you like PNB, ICICI clear winner. Big thumbs down, which was it? Big disappointment.
So I'll tell you, see, big thumbs down was Axis for sure and HDFC also for sure. Okay. Although I like HDFC, as everybody knows, but it was a disappointment that 12 bips QOQ. But the hope is that there is a bottom. That's a hope, right? That's a bottom. The hope is that August and September you will have FCNRB deposits coming in, and some situations gradually will happen that this kind of bottom NIMs, for example, just take Axis Bank has guided for 3.8% through the cycle NIM, 3.8. Today, this quarter they were at 3.46. So how can they go further down from here? Otherwise they'll miss their guidance completely. And that's what I think they said on the call, that gradually this will improve.
But a big thumbs
But
down.
that is still a hope, I would say.
Okay, yeah. So effectively your hope, you don't want to play hopes. Maybe ICICI Bank is a better way to play it right now. Okay, before we move off on maybe the chart checks for some of these banking names as well. Sumit has been waiting by, and I thought viewers are waiting by as well to hear what is it that remains the chatter on the dealing rooms. Sumit, good morning. What are you hearing?
Good morning. Firstly, it's a global spirits. Now, dealers indicate that there could be a potential fundraise announcement that could come in very soon in this counter. For GNA Axles, dealers expect a block deal by one of the promoters to happen in market. When it comes to Petronet LNG, there are sell flows on the large HNI and the PMS desk, and dealers indicate weak regasification volumes that could impact the earnings as well for Petronet LNG. For Bharat Forge, there are buy flows on the DI desk. Dealers expect strong Q1 numbers, and for Laurus Labs again there are buy flows on the lower levels on the HNI desk from earnings perspective. And lastly, when it comes to Bharti Airtel, there are some sell flows on the PMS desk because dealers are expecting a potential block deal to come in from Singtel's side post the Q1 numbers. So keep an eye out for Bharti Airtel as well in trade.
Got it. Okay, certainly keeping an eye out for that. Bharti Airtel, let's see if there is that perceivable weakness that comes in. Actually, Kush Bora, can you come in on that? Since we're talking of large caps, Airtel, one, if indeed the charts look like there could be some downsides, and from amongst the large banks that we spoke about, right, which one looks good on the charts? Which one looks weak on the charts?
This is where the fundamentals and the technicals are going to marry, where ICICI does actually stand out. It's actually crossed the 20, 200-day moving average, falling trendline resistance, but there is a negative divergence popping up, which is suggesting that the near-term run could perhaps be done. So if I had ICICI, yes, I would book profit today, and a re-entry point on that would be close to the 1400 mark. 1390 is the support zone, by the way. So ICICI Bank does look good. Kotak, like I've always said, not in a big favor of. So maybe if I had, I would exit right now. Bharti Airtel, now this one's building up, but the momentum's missing. The 200-day moving average at 1950 acting as a stiff resistance. So I would wait before I make any big purchases, at least from a trading perspective. Momentum indicators negative, bearish crossovers on this one. So Bharti Airtel right now from a momentum perspective, best avoided.
Okay, so that's Bharti Airtel right now. In fact, another heavyweight that we need to watch out for is Reliance Industries. The profits have gone up 23%, EBITDA up around 8% on a sequential basis. Your numbers have been in line with what the street was estimating. The retail segment growth has slowed and the overall profit has gone up 23%. JP Morgan maintains in the overweight they have a target price of 1,660, and what they've said from here, then you have Macquarie, which is maintained and outperform as well. They have a target price of 1,510. They're saying that earnings have been driven by stronger refining margins and growth in Jio. The ARPU has been slightly above expectations and the segment margins have improved as well. However, the overall margin decline is mainly on the back of the FMCG business merger that has impacted as well. In fact, in terms of upstream gas business, they've seen a higher production as well. And JioStar revenue has grown 14% with better manufacturing facility utilization. So that's what brokerages are indicating. Parag bhai, Reliance right now in terms of the way earnings have panned out and where the stock is trading at, would you still be, first, what do you make of the earnings? And two, would you be a buyer?
So basically, see, O2C was a good 17% jump and EBITDA across 17,000 crores in O2C. And one good thing about that is that petrochemical business, which was suffering since last 2-3 years, has finally entered into good profit zone. Because globally, a lot of capacities have shut down because of this volatility. So I would say that that is one good thing. Telecom business always remains steady and they keep on gaining subscribers. So that is steady. In the absence of tariff hike, there will not be a major surprise in telecom business. The retail part has disappointed. Retail there was a degrowth, but the company has said in its release that they are investing behind JioMart. And they want to scale it up so this is a year of investment. From next year, that will start showing good growth, and they want to capture maximum value through JioMart in next 3 years. And they have also said that the retail EBITDA they are aspiring. And their ambition is to double their retail EBITDA in 3 years, which is a very huge ambition, I would say.
Yeah, because they have consistently underperformed.
Yes, so let's see. That is a key monitorable. Retail will be a key monitorable for Reliance, apart from tariff hike, of course, which is okay.
But so, do you give a thumbs up to these numbers, and is therefore in addition to your portfolio or no?
No, I feel that I would not go buy fresh at today's price or higher than today's price. But on dips below 1300, if market is disappointed due to retail degrowth, if it dips below 1300, I would seriously consider it. We are on Friday. We came to know that promoter has also increased their stake by 0.48%. Which is around 8,500 crores. So
just to clarify, the reason you're saying you won't go and buy right now is not because of valuations, it's because expected growth.
Valuation-wise, it is attractive only. The only thing is that retail. What I'm trying to say is what market will think.
Sure.
So market can think that retail, which is a big driver of value, where they have 86% stake also. If the retail has disappointed, then what? Then that market can think, right?
Okay, so that's Reliance Industries, okay, and you said those that have disappointed you. Let me broaden the spectrum and say that based on earnings reactions, if there are any stocks that have posted numbers post-market hours on Friday that drop very substantially, would they be on your radar? Which would those stocks be?
So in banking, clearly Federal and Indian.
Okay.
Those were the clear outliers of, like ICICI Bank. In their buckets, they posted the best numbers in banking. Then, of course, Reliance, as I said, below 1300 will be, I would seriously consider. Bajaj Auto, I'll not repeat again. Tomorrow is the result, by the way. And Bajaj Auto is, any big dip in Bajaj Auto is a buying opportunity. But at the same time, Alex, I would like to say that today GIFT Nifty is showing a very, I would say, flattish, slightly negative opening, but actually the Qs are very negative, if I would say.
Yeah, they are.
See, oil is at above 90, right? Then your results have not lived up to the expectations. So I would say that there are not many good things today in the market, frankly speaking.
There aren't. And so therefore, that's the reason, Kushbhai, you're saying that you'd be very careful in stock-specific action. But let me ask you about these banks. Since we didn't take a check of the banking pack on the technicals, right? Let's go ahead and do that. If you have an ICICI Bank, an Axis, a Kotak, HDFC Bank, let me throw in some of the smaller names as well, even the public sector bank, Punjab National Bank, Punjab and Sindh Bank, Federal Bank, and then the Poonawalla FinCorp, Reliance Industries posting numbers.
Quite a whole host of stocks, right? But let me also add one more point here. I think I missed it in the opening comments, which is the FII short positioning on index continues to hover around that 90 mark. Remember on Friday we spoke of this very same thing, which is a week prior when everything started to look good, but the only indicator, which is the FII short positioning at 90% was maintained, and then we had an announcement by Trump about the cessation of the ceasefire. That is still maintained, and I have a very keen eye on that because FIs, for that very reason, I am assuming that they have, or perhaps they believe that geopolitical worries are not going away anytime soon, have this short positioning. while it's not reflected in the index, like I said, it started to reflect very clearly in the portfolios and especially in the mid segments. That is a bit of a worry, and hence my thought that stay light. Now, as far as a lot of these names go, like I said, ICICI is something where you book profit. Federal Bank and Federal Bank, by the way, had a good run. It is above resistance zones. The move on Friday, very encouraging. I would very clearly hold this, but the trailing stop loss at 335. Indian Bank could make an up move, but then 850, that's a stiff resistance zone. So some of these banks, like I said, most stocks today and banks especially, today is the day for profit booking. My concerns around Reliance Industries. 1300 or 1330 to be very specific, around that, October to December 2024 was the period where it had a stiff resistance and then it broke out. Right now it's still consolidating. So unless it closes comfortably above 1330, 1350 zones, I think this is a consolidation phase, but you can go long positionally, not a momentum play.
Yeah, it seems like it's opening positive though. The first ticks are in. You have the equity markets that have opened up. The pre-open session, of course, 0.2% lower for the benchmark Nifty 50. This is really par for the course, because on the one end you're seeing pressure from some of the private sector banks, but on the other end of the spectrum you're seeing Reliance Industries that's trading positive by about 1.3%, ICICI Bank that's up about 1.4%, and that's proving to be a little bit of a buffer for the fall that you're seeing in the likes of HDFC Bank, which at this moment is down as much as 3.6%. That could well settle over the course of the morning, but don't be surprised if it is a significant underperformer in trade today. It wasn't the best set of numbers. Kotak Mahindra Bank also losing about 2.5% or so. Bharti Airtel, and you had an indication of this on account of what Somit said in his Heard on the Street segment. There are sell flows that are coming through. There's some buzz of a stake sale that is brewing in that particular counter. State Bank of India losing about 0.6%. But at this moment, the big losers are in fact the three banking names. That's HDFC Bank, Kotak Mahindra Bank, and Axis Bank also losing ground. Let's see how they open up in the remainder of the session. For now, let's head across to find out what the other earnings reactions are, because it's earnings heavy this morning. We've already spoken about a host of numbers, but there are more companies to talk about. Puneet joining in to round up that list. Puneet?
Well, thank you for that. I think a host of banking names were taken by you guys, but Axis was one of them that I wanted to focus on as well, because while the business update was very strong for Q1 and you saw stock react as well, the actual numbers have come in slightly more weaker. So there has been NIM compression and it has been steeper than what the most analysts are also working with at this point of time. While the provisions are down by almost 37% quarter on quarter, that has boosted the operating profit as well as the net profit, which is up just 1% on a quarter-on-quarter basis. But Citi has largely maintained a buy on a counter with a target price of 1620, but mentions that the NIM compression has been much higher than they had estimated, as well as the fee growth has been much slower. The other factor highlighted that the retail growth has also been slower compared to both the corporate side of things, so that will be something to watch. Similar by Kotak as well, where they mentioned that the delivery on growth, while the visibility of NIM expansion is yet to be validated, that's one other point mentioned, so watch out for Axis today. The other one's Bansali Engineering, really strong growth numbers for this counter. Revenue is up almost 53%, EBITDA up 55%, and net profit is also up 43% in this particular quarter. Net profit has come in at 43 crores, was 65 crores versus 45 crores in the same time last year. They also have announced the 200 crore capex in this particular quarter that will be funded entirely by internal accruals, and also announced the first interim dividend for the company in this particular quarter. Inventory days though were increased in Q4. That will be monitorable going into Q2. They were high at almost 75 days, so that will be something to watch. And the final stock is Canfin Homes, yet again a banking and a financial name where the total income was up about 7%, but the net profit has actually grown by almost 19% in this quarter at 268 crores. Now, loan assets have actually grown by 11% at 42,000 odd crores, and the NIM has been at 3.81% versus 3.93 at the end of FY26. So, seen NIM compression yet again, as with other banks as well as financial companies, but Morgan Stanley has actually maintained an overweight with a target price of 1,055, where they feel that the SMA pool was largely stable on a quarter-on-quarter basis, but our valuation also offers upside given the current share price and where it is at this point of time.
Puneet, thanks so much for getting us those details. And certainly some of those stocks stand out in terms of the big gainers from the broader markets as well. Poonawalla FinCorp gaining about 3%. PNB looked okay. This was pointed out to you earlier in the day, 2% higher. Ventive Hospitality, KPR Mill, Canfin Homes, these are some of the stocks that are gaining ground a little bit at least at this moment. JK Cement losing about 3.5%. HFCL also losing ground. RBL Bank, on account of the contraction in its margins, is losing a little bit of ground today. So too is Nuvama, which is losing over 3% at this moment. Kunal Rambia, founder of The Street, joining us this morning. Kunal, very good morning to you and thanks so much for taking the time. The suggestion at this moment is, because of the kind of uncertainty that's swirling, is to be a little light at the start of the week. Do you concur? And what is your view on the benchmark?
Good morning, Alex. Thanks for having me on the show. So as far as Nifty is concerned, we saw the first high of Nifty on 21st April. That was somewhere near 24,600. And since then, it's a massive curve formation which is underway. Friday's close was very, very positive. And so if Nifty closes about 24,550, I think we might see the levels of 26,000 to 26,500 on the midterm level. So Nifty, I'm extremely bullish. I'm just waiting for the breakout of 24,550. And as far as Bank Nifty is concerned, it is already much stronger than Nifty. The breakout is placed at 58,750. Any closing above 58,750 might show us the levels of 61,000 on the higher side. So extremely bullish on the formations as of now.
Okay, extremely bullish on the formation. Interesting. So if you're that constructive, Kunal, good morning, Neeraj here. What are the stocks on your radar this morning?
Morning, Neeraj bhai. So first counter is Aegis Logistics. This counter was extremely strong on Friday and the momentum was really strong. So considering that, one can go long on Aegis Logistics with the stop loss of 1280 and the targets can be 1450. The second is Bharat Forge. Again, after broader consolidation, Friday gave a very decisive closing with good volumes. So with the stop of 1240, one can go long and the targets can be 2300 and the stop loss can be 2240.
Okay, interesting. And interesting that Bharat Forge is a name on which Goldman has come out with a set of notes today, and on Bharat Forge they are neutral, but where they are constructive on are two stocks, and one of them is Craftsman Auto, where they have a buy call. Sharad Johnson with the rationale which Goldman has for, well, maybe initiating coverage or having this buy call on Craftsman. Sharad.
Well, good morning, Neeraj. Interestingly, there is an angle of data center also. Goldman Sachs has initiated a buy rating and the target price is 11,600. That means almost, you could say, 20% plus upside potential from the current prices. And the engine block specialist, the company which is in, they might benefit from the global data center build out segment and the aluminium content per vehicle. That's also expected to increase as you look at the transition happening to the EV segment. Now, the engine block business is poised to benefit from this as well, and the local for global engine theme which is there, that is where a big opportunity comes in or a growth driver also comes in. The ongoing turnaround in Sunbeam segment is also likely to support the profitability and the return ratios going ahead, and that is why Goldman Sachs is bullish on Craftsman Automation.
Starting off, thanks Sharad, thanks so much for that. Starting off okay, 1% higher. In fact, Sansera is the other one on which they've come out with a constructive view as well. Should pull up Sansera Engineering as well and see what that stock is doing, about 1.25% higher. So not a bad start for both of these. Parag bhai, any thoughts here?
I think both companies are great. They've done really well, but I'll not buy at these valuations. They have gone up too much.
They've gone up too much. Okay.
But yeah, companies are fantastic.
Companies are fantastic, but well, the fantastic companies don't necessarily make fantastic stocks, by the way. Keep that in mind. Not to say that these are not, but Parag bhai's view is that it may not be the best time to buy into any of those. 908 has settled. Let's pull up all the key names. So Reliance, ICICI Bank, HDFC Bank, Kotak Bank, Axis Bank, 5 large caps. We should try and see what they are doing. RIL soft. ICICI Bank shouldn't be in the green, but let's wait and watch. Actually, marginally, HDFC Bank is it in the red. Very quickly, let's roll these stocks, please. HDFC Bank 3% lower. Kotak and Axis are the other two, and not a good start for either Axis or Kotak or HDFC Bank. So dips, sharp ones at that, into a couple of them at least. Parag Thakkar, are these opportunities, or would you bide your time? There's no rush to buy into these.
Yeah, especially with the geopolitical thing, whatever is happening, and oil at above 90, there is no need to rush.
To buy anything?
To buy anything. Of course, I will say that If I want to play India, I will play through ICICI Bank. That is one stock which is... So basically, from my view perspective, I am not a seller, even if ICICI Bank goes up.
That is determined.
But that is different.
So I'm asking for the other three.
Yeah. For the other three, definitely there is no need to rush in to buy. For HDFC Bank, of course, and Kotak, of course, these valuations are very, very attractive. But I would still wait.
Better opportunities down the road is what you're foreseeing.
Yeah, because right now the markets have gone up. The war has again started. Oil is again at 90. So the setup is not that great for bottom fishing.
So why Reliance?
No.
Below 1300.
No, I'm saying that at some valuation you have to buy, right?
So that valuation is not true for HDFC or Kotak right now.
I'm saying that gradually stagger it. Because the macros have worsened. So you have to keep that in mind, and that you are not going to get immediate gains. So you have to buy from long-term perspective in a staggered manner.
So you remember at the start of the conflict, we had asked you what percentage of your cash, if you're holding, you would deploy. If you had cash right now, what percentage would you deploy?
No, I am actually right now sitting on around...
I'm not asking about yours, Parag Bhai, because you've deployed and you've spoken about where you've deployed.
Yes.
If you have cash available, should you deploy?
But in this up move of the market, some cash has been raised, and I'm planning to raise some more cash also.
Sure.
Wherever possible.
So effectively, he's not deploying.
He's not deploying, and you would not suggest deploying either.
Let's see. Because I feel that markets have gone up and macro situation has worsened. So there's a combination for me to be slightly on sidelines.
But I think the template is set out there.
Yeah.
Oil being higher, you just got to be careful about deploying too much.
At 24,200, even as we speak right now, it's not like it's reflecting what crude it was when crude was last at 90-100, right?
Yeah. So just the template is simple. Oil on the boil, the upsides are capped. Be very careful, be very nimble. And be very selective. By the way, being selective also means looking at some pockets which are actually giving some good numbers. I wanted to pull up the stock price of Tattva Chintan, and I wonder if that is reacting at all to the very good set of numbers that came out from that stock. So pull up Tattva Chintan Pharma and see if that is reacting at all to its numbers. Can we have that stock on the screen? Okay, it'll come up in a moment. But some of these chemical names are essentially giving good numbers and good build-ups too. Kush Bora, I think, had a call on Deepak Nitrite, if I'm not wrong, right? Yeah. So Kush, Tattva Chintan, Deepak Nitrite, Deepak Fertilizers, etc. How do they look on the charts?
Well, Tattva Chintan was one of the stocks that I was considering, but again, we knew there could be, this kind of an impact, so no point putting that out. Right now, if you have a position, not a bad idea to at least book partially. The structure is bullish on this one, and hold the rest with the stop loss close to the 1485, 1480 zones. Deepak Nitrite had a big crack on Friday. It's continuing from there. Primary structure from a near-term perspective is still bullish. So as long as the 50-day moving average around the 1680 mark, 1675 zone is held, we'd remain constructive on this as well.
Okay, we're opening gap down, but last 40 seconds, Kunal. Quick 15-second view, one stock that we've not spoken about that you like?
I think Canterville is showing good strength in the last 15-20 days. So I think this trend might just continue. With the stop of 240, one can definitely consider this.
Kush, anything that you're spotting?
Yeah, given the texture of the day, I think, MFSL short call, I'll go with that. 15 and 1490, these are your targets, and 1560. MFSL, Max Financial.
Max Financial, not Motilal Oswal, Max Financial. Neeraj, over to you.
Okay, well, let's see how some of these stocks behave as the course of the day shapes up. But remember, we are likely to start off slightly sluggish, and some of the banking names are actually the culprit because ICICI is flat and the others have really taken a hit. Let's bring up the heat. Let's bring up the market open. 0.5% lower, and banks are the culprit here. 1.21%. It's the bank Nifty, as a result of which the Nifty is down 0.5%. The Sensex is down 0.5% as well. Market breadth is not terrible. It is essentially the large cap banking names. Bring up Nifty IT just very quickly before we get the heat map up on the screen, because IT is charting a slightly different course and negating some of the losses here. But pull up the heat map and see what HDFC, Kotak, Axis Bank are doing right at the bottom of the pile. HDFC Bank down 4%, Axis 3.5%, Kotak 2.5%. Indigo, no surprise with Brent at 90, would be correcting. Some bit of weakness in Bajaj Finance, some bit of weakness in some of these auto-related names like M&M and Maruti also. On the other side, ICICI Bank is giving that support 2% higher on a day like this. Well, the only large cap bank which had got NIM expansion with the numbers that it did versus some of the others, just charting a different course for itself. Tech Mahindra up another couple of percentage points. JSW Steel, a clutch of upgrades after their numbers. That stock is up 1.2%. Cipla, Hindalco, Wipro and Reliance, the big boys participating. Actually, it will help to pull up the point contributors because Reliance and ICICI Bank together are thwarting some of the losses that are coming in from the larger ones. Look at this HDFC Bank, 124-point contribution. Axis and M&M are the others. Just some attempt by ICICI Bank and Reliance to thwart that along with SBI. But yeah, about 40 odd points here. But yeah, a large candle, large negative point contribution by HDFC Bank that is not looking very pretty today.
And I think that's going to be the story of the morning, Neeraj, as things stand right now, because the private sector banks really taking the cake with regard to the downticks that you're seeing on the screen. Let's take a look at the broader markets as well and see where they are. The mid-cap index and the small-cap index, pull that up on the screen. Just about flat for the mid-cap index. That's kind of reflected based on what you're seeing with regard to the market breadth in the small-cap index, just about 0.1%. So no big movers there. Pull up the sectoral heat map just to see where things are, and you will see quite a bit of red on the screen, not as much as I had thought actually. You have the pharma index, PSU banks that are doing okay, and I'd be curious to find out which ones specifically, but you have the metal index that's up about 0.9% as well. Healthcare and pharma are leading the pack though. What's not doing well is the private banking pack, no surprise there, because all of them are down in the dumps. You have the Nifty Bank as a result of the private bank move that is down about 1.4%, and realty is losing ground about 0.8%. But remember, this is an index that has gained quite considerably in the recent past, particularly over the last few weeks. Let's talk about individual counters, jumping straight into it then. And Oberoi Realty posted its numbers. Actually looked like a pretty decent set of numbers, but the stock is losing about 2% at the start. Probably some money being taken off the table here. Let's talk about Poonawalla Fincorp. It had a pretty decent set of numbers. PAT growing by 5x on a year-on-year basis. It's up just about 0.4%. Remember that Parag Bhai, for one, believes that the company, a lender, should not be growing as fast as Poonawalla Fincorp has grown, but some other people believe that that's something to watch out for. You have several earnings reactions that are coming through, so let's pull up those numbers. You have Punjab and Sindh Bank that's up and about. RBL Bank had a contraction in its margins, not the best set of numbers. Yes Bank taking it on the chin, down about 3% or so. There's also PNB, there's Canfin Homes. PNB is looking good, and this is probably one of the reasons why you're seeing the public sector banks that are doing well this morning. Canfin Homes losing about 1% or so at this moment. JK Cement also, actually let's go to Bhansali Engineering next. And okay, JK Cement is down about just a flat or so. But let's talk about India Cement. It's a turnaround quarter for this one, and Bhansali Engineering. Bhansali Engineering just about 0.6% higher. Pull up India Cements. Oh, this one's taken a bit of a battering. It looked like a turnaround quarter, but I think the broader questions about the input cost pressure for this pack is going to have a bearing on the results. Let's talk about Tata Power. It's gotten an order for a 324 megawatt pump storage project, not doing too much. Alembic Pharma, Natco Pharma, US FDA approval for a tablet has come through. Both of those stocks, particularly Natco, that is doing well in trade today. But I'm wondering, Hiral, whether you're seeing any action in the broader market to speak of, or is it primarily the frontline banking stocks that are taking the headline this morning?
That's what it seems like, right? I mean, it's a ICICI Bank which is the top gainer on Nifty 50 versus the other private banks which are losing out from the major ones. But in terms of broader markets, you have E-Clerks which is slightly under pressure. Premier Energies is another one which is down 4 to 5%. We've mentioned about the banks as well. Tips Music, that stock has been in focus as well over the last 1 week. Wabag on the back of an order win is up nearly 4% as we speak. So otherwise, nothing major that we are seeing. However, volumes have started to build up in terms of Kalyan Jewelers. That has continued, so that's interesting. Apollo Hospitals is another one that you should be watching out for as well. But clearly, I mean, it's the banks which are front line and center from here on. I think we should take this question forward with Kunal as well. Kunal, in terms of the way markets have opened right now, let's talk about the banks itself. Anything that is on your radar which could be a good momentum pick for today?
Morning, Hiran. So, as you know, you must have seen that in last 1.5 month, Nifty and Bank Nifty has been more or less into sideways consolidation itself. Look at the Bank Nifty support level, which is 57,450, and that's not broken since a month now. Though minor 1 and 2 days of ups and down are fine. So, I think this correction seems to be like a good buying opportunity for short-term traders. I'll still stick to the banks like ICICI, which is okay to me, showing good momentum. Trailing stop loss of around 1440 can be maintained, which is today's low, or someone already holding the position can think of keeping the stop loss at 1420. The second is SBI, which we discussed last week also. I think this counter is ready for the breakout. 1055 is to be kept as a breakout level. Closing above that will open the doors till I think around 1100. So yeah, overall very bullish on these banks.
Okay. Kushbara, opening thoughts?
I think we'll watch for support levels more than anything else. If Nifty holds about 24,000, 24,100 and Bank Nifty holds above 57,300, then we'll take this as a win for today and for the next few days to come. So right now it's more about the indices holding on to these supports rather than actually building on from here.
Okay, Parag, very quickly, JSW Steel, lot of upgrades post the numbers. You've been constructive here.
Yes.
Yes. Is this something that you would add, or because the conflict is there, you would probably bide your time here too?
No. So basically, on any dip, I'll add, and I have been doing that in JSW Steel and Hindalco both. On any dips, I am a buyer.
No, my question.
Because my view is very clear. See, Q2 will be a softer one for all steel companies, right? Seasonally, demand is less, plus cooking coal prices have gone up. From Q3, you will see a pickup. And my ultimate target for JSW Steel is that FY32, they'll do a EBITDA of about 70,000 crores. If you just give 9.5 times to that and reduce debt from it, the market cap should double from here. So market cap should double from here in 3 to 4 years in JSW Steel. Everything else remaining same because they are the most efficient converters, as I always say. They are not too much dependent upon steel price and all.
Got it. Okay. Parag Bhai, Kush Bora, Kunal Rambia, thank you so much for joining me today, gentlemen. Really, really appreciate your time. Great calling on ICICI Bank, Parag Bhai, Kush, great calling on some of the chemical names. And of course, Kunal, great calling on some of those refinery names. Let's get in. Very special guest, Tushar Bora, partner of Invexa Capital, joins in right now to talk about his thoughts on the markets and what themes is he looking out for, if at all, in the current context. Tushar, great having you. It's been a while, but thanks so much for joining in. Neeraj here. Good morning. Oil being what it is right now and the geopolitics specter being what it is right now, is it best to stay on the sidelines, wait for the dust to settle, or could this be the dust that doesn't settle for the next 6 to 9 to 12 months?
Thank you so much, Neeraj, for having me on the show. Good morning to everyone. So interesting, if you had asked this question to any market participant 3.5 months back, you would have got the same answer that it's best to be on the sidelines the first week of April. And if you see what the markets have done since then, you would have missed one of the biggest rallies in mid and small caps in select themes in that time. So there is no right answer. But what I believe has happened, the markets may have likely bottomed out for this year sometime in the last week of March. I believe that going forward, we'll continue to see bottom-up differentiation. Specific themes and stocks will continue to do well. The idea is to do your work, get the right thematic spaces, and try and identify good, safe pockets in those spaces. Pockets where earnings, momentum will relatively be strong in the near term, rather than trying to avoid the market or taking a call on the broader geopolitical variables.
Tushar, good morning. Hiral on this side. My question is, you're talking about the way broader markets and your large caps are performing as well. But if you have to look at valuations right now, in terms of Smiths, I think they're nearly at their all-time high as well. And when you talk about large caps as well, do you think then the valuations are much more attractive in the large cap space, though there is action in the small and mid cap space?
So actually, over the last 3 months, in fact, mid and small caps have materially outperformed the Nifty. And there's a good reason, because in a lot of those areas, you see incrementally the growth expectations are much better. And at least in several pockets, the valuations had corrected to quite reasonable levels. Even today, it's a large market. As an individual investor, or even for many institutions, you need only specific stocks to do really well. So I would say that you'll find those opportunities across both large and small caps. Just take as an example, large caps, a lot of interesting names, cement and steel, core economy sectors. Cement has not done anything virtually in the last 1 year. And there are a lot of good opportunities to invest out there. Likewise, if you see banks, financial institutions, large sector, almost 40% of the market weight. And there's a lot of differentiation opportunity available there. So across large as well as smaller names, you'll find your investment opportunities.
Tushar, I heard you start off this conversation saying that there is the rightful price appreciation at the mid end of the spectrum simply because the growth looks solid there, right? Therefore, is the bias towards the non-Nifty or the non-Nifty 100 names a lot stronger than what it was before? Part one of my question is that. And because it's such a wide bucket, help us narrow it down. In that cohort as well, are you looking at smaller steel and smaller cement names? Or are there other sectors where you are a lot more confident with a, let's say, with a 1 year or a 1.5 year view? If it's even possible to take these days, considering what's happening in geopolitics.
Yeah, so in fact, cement and steel is just used as a representative example. But if you see large cap cement names, a lot of those stocks haven't done really anything in the last 1 year. When you come to banks, again, large cap private banks, there's been a significant underperformance in several names over the last several years. So incrementally, wherever you see any pocket of earnings upside in these names, or take a completely different sector, let's say consumption, the valuations have materially corrected for several consumption names, and the earnings expectations are relatively muted, quite moderate in many pockets. So wherever you see even a slight earnings surprise, you will see a material re-rating. And if the markets have to move up, obviously it will be large cap led. So from an institution standpoint, there are enough opportunities available in large caps at attractive valuations, factoring in both near-term volatility as well as medium-term growth. But from an individual investor, a lot of your audience will be retail and small PMSs. To them, I will say that you will find equally good, maybe even more attractive opportunities in the mid and small cap, even from here. So depending on what check size you have and depending on what's your horizon, there are opportunities across both.
Okay. Tushar, how are you looking at pharma as well? It has continued to deliver growth. In the last 1 month as well, the gains have been substantial. Do you think there is a case where the growth could continue right now in terms of pharma as well? And are there enough tailwinds if you have to actually look at the CDMO section as well?
So pharma, I think, will continue to do well. Interestingly, between IT and pharma, both being defensive, export-oriented sectors and currency beneficiaries, IT has clearly seen, a sustained downside, and that leaves pharma as a major defensive sector for institutions to focus on. Earnings growth momentum is quite robust, as well as if you see the multiples were quite attractive in the larger cap pharma space, as well as in a lot of the smaller pharma companies. And that is why the last few months, last 6 months, the sector has done really well. I believe incrementally it will continue to do well from here. CDMO within pharma, specific pocket, most of those companies are attractive when you take a 5-year out view. But from a near-term earnings perspective, near-term valuations perspective, they're already quite expensive. Some of them are trading at 30, 35 times plus multiples. So here I would say that, again, bottom-up work is very important. You can't just buy any stock in the name of pharma as a theme. You need to be ready with your work. You will get market volatility. In that, you get the opportunity to buy. Starting from the right, the biggest companies in the sector, there is value out there. You need to be prepared with your work. Now, rather than just play the theme as a broad thematic index.
Okay, so a broad theme that is being played out as well. But thank you, Tushar, for speaking to us. We would love to have a detailed discussion with you, but we will connect on another time on this one as well. But moving on, Havells India, pull up that one. A strong revenue growth is what they've seen. Input costs have been a squeeze, Alex, and I think that's the conversation we should be taking forward.
Yeah, absolutely. That's exactly the point that I want to raise with the management joining us right now. Anil Rai Gupta, Chairman and Managing Director, speaking to us on NDTV Profit. Thanks so much, Mr. Gupta, for taking the time. I do want to ask about that. Revenue growth robust, but at the same time, margins under pressure. Why is that taking place? Are you not able to pass on the input cost increases?
I think first of all, as you rightly said, the revenue growth has been strong. If we break down our margins into contribution margins versus net EBITDA margin of the PBT, our contribution margins have been fairly stable, which actually means that despite the volatility in the raw material prices, have taken a disciplined stance to maintain the contribution margins and having passed on the price increases in a staggered but well calibrated way. What has affected the overall margins is the higher spends on advertising and promotion in the quarter. We do believe that it's an exercise. We see a big jump in this year because last year the season for summer products was very bad, and we took some calibrated decisions of underspending on the advertising promotion last year. So hence we see a larger growth in this year. But having said that, overall in the entire year, we should be coming back to normalized A&P spends, which would mean that our net margins will also come back to normalized levels.
Interesting. Okay. The question, though, is how much did the West Asia disruption impact the switchgear business in particular? And actually, before I get to that, have you managed to pass on the entire input costs that have taken place?
So depending upon product category to category, in cables and wires, for example, the rise was the highest because of highly commoditized nature of the product. And then again, in consumer product categories, I would say on average it was 7 to 8% increase. As I said, we had taken calibrated decisions to keeping an eye on the revenue growth as well as the margins. But by the end of the first quarter, we do believe that we have been able to pass on the entire cost increase, which would mean that if the raw materials continue to remain at the same prices, that we will not require to have more price hikes in the coming quarter.
Okay, all right. So that's certainly something to look forward to. The question, though, is how much additional disruption you're going to see. In fact, let me ask you about the switchgear business, because that clearly seemed to have an impact on account of the West Asia crisis. When do you expect normalcy to come through there?
I think, if you look at our switchgear business, some part of that comes from exports to Middle East and Africa. And out of our total exports, which is still a small number, it's a reasonable part of the switchgear business. So hence the lower growth or degrowth in the exports to Middle East and Africa did impact the overall growth for the switchgear business. Having said that, I think we should be in the coming quarters, we should be able to take care of that by the domestic resilience and demand. Right now, the West Asia crisis, how it pans out, it's difficult to say. So, which means the exports can be under pressure in the coming quarters. But I think we are quite enthused by the domestic demand.
Okay. So the domestic demand is proving to be a little bit of a foil. Let me ask you about Lloyd, Mr. Gupta, because it's underperformed the RAC industry. The question is, did you lose market share? There was also this entire situation with the inventories, and for the industry as a whole, it seems to have eased out over the course of the year so far. What's the strategy that you're using now to reclaim some of that lost ground?
I think overall, if you look at the first 6 months, there were various changes which happened in the industry. First of all, in air conditioners, the B ratings changed on the 1st of January. Then post end of February, there was a lot of raw material volatility. So I would say that, despite all that, we are fairly, positive about the kind of performance that we were able to achieve in the first quarter. And as you rightly said, there was high inventory into the system, which has been cleared by the end of the first quarter. So again, going forward, we should be looking at a reasonable demand for Lloyd products.
Okay, let me also ask you about what you're witnessing so far in the first quarter. I mean, second quarter rather, early days. But do you see some element of normalcy returning, particularly in the context of the uncertain external environment?
I think, as I said, the first quarter, the demand has remained strong despite the volatility. It does impact the volume growth a bit, but the value growth has remained strong. So hopefully, if things remain very stable and there is not high level of volatility, we should be expecting a decent growth in the coming quarters as well.
Okay. On the cables and wires business, which is your largest segment, there is increased competition. It's not a new story, but I'm wondering whether there's been an impact on pricing ability, on market share. What are you experiencing right now?
I think as far as cables and wires segment is concerned, it's a bit of a long-term play for a company because there is a high level of brand association, distribution, loyalty in the channel. So I do believe that any new player coming into this segment is actually good because it organizes the industry in a much better way. There is still unorganized and regional competition in this industry. So hopefully, organized players coming into the industry is overall better for the industry. So we do believe that, having said that, our efforts towards, capacity building, towards brand building, towards distribution reach will continue to remain strong so that we, not only protect our market share, but also increase our market share.
Let me ask you a broader question at the end of this conversation, Mr. Gupta, which is, as a representative of India Inc., are you facing the remainder of FY27 with the idea of having to be more nimble than you have been in the recent past? Or are you optimistic, cautiously optimistic?
Well, the fact that we are nimble and, agile, that's why I'm very positive about the coming year. And that, again, as you rightly asked this question about the representative of the Indian industry, not just for Havells, but despite the crisis in the first 6 months of the calendar year, I think India Inc. has done well overall, especially the companies who are more focused on the domestic demand. So I'm very hopeful, the India Inc. should continue to do well in the coming time as well.
All right, Mr. Gupta, thank you so much for taking the time, and certainly hope that is the case. All right, let's take a look at the intraday chart for Havells. It has risen from the low point of the day, up about 1.4% at this moment, and rising in a market that's not necessarily the most conducive this morning. Hiral, it must be said. Pull up the benchmark Nifty 50 and see whether it's moved too much at this point. And one would assume that it hasn't. It is, in fact, very close to the low point of the day on account of the pressure that you're seeing in the banks. And pull up the private banking index and then the constituents of that private banking index. You'll see what I'm talking about. It is the likes of HDFC Bank, the likes of ICICI Bank even, that is trading a little bit of pressure, despite the fact that the stock is performing better than the rest of the banking pack. But HDFC Bank losing 5%. It's
quite a lot, right? And that's the reason why, if you talk about Nifty 50 as well, we're below that 24,200 mark. So the first support level that has been broken as well right now in the first hour of trade. And now 24,100 is what the street is eyeing as well. But with that, HDFC Bank, Axis Bank, Yes Bank, Kotak Mahindra Bank, all under pressure. What's interesting is the Punjab National Bank, which is nearly 4 to 5% on an uptrend in today's day of trade, and that is again reacting on the set of numbers. Let's pull up a Federal Bank as well, because they also posted a strong set of numbers. The net interest margins trajectory with regards to where Federal Bank was very strong, and that stock, however, down almost 0.4% as we speak. The other one that we need to talk about is a JSW Steel. A steady quarter is what they've reported, with volumes rising and EBITDA surging. To Nisha joins in as well with the highlights, and the conversation with the management is what she will be taking forward. Nisha, interesting set of numbers that we've seen from a metal counter. Everyone wants to now know as to what's going to happen with the West Asia crisis as well. But from an earnings perspective, what did the quarter look like?
So two important things really, Hiral, that really played out. One is the global, price support. It's a global traded commodity, and therefore the pricing has been higher because of West Asia. That, anyways, they had predicted and projected. The second important thing is the demand. Jayant Acharya is joining in from JSW Steel to take us through the quarter. Now, Mr. Acharya, always a pleasure speaking to you on NDTV Profit. Of course, good set of numbers, record sales numbers, backed by demand as well as pricing. Take us through the internals in terms of the key factors and the drivers in the quarter.
The quarter one has seen a very strong operational performance. India demand, I think, was one of the basic drivers. It grew at 8.3%, the steel demand. and that has driven good growth. Our capacity utilization, excluding BF3, was at 94%, and that quarter-on-quarter basis showed a volume growth of 15% on production side, while on the reported number, it's 3.3%. Our sales consolidated sales were good. We had a good mix of flats where the pricing and the demand was better. The product mix was also helped by value-added and special products, which helped the overall mix from an EBITDA point of view. The sales realization increase of about roughly 6,500 rupees quarter on quarter was offset partly by higher cost and a better mix, as I've explained. So that has played into a better result for the quarter.
All right, so good demand really playing out. And of course, you've written that autos, renewables, these are some of the segments. Tell us, where is the demand really surfacing from? Are there new areas also developing for the steel companies to take benefit from?
So first on the automotive, I think the automotive growth momentum has been really robust. Post the GST cut in September last year, auto has been on a roar, and I think it continues to do well. What we see is a very good traction in the retail on the rural side, where the consumptions of passenger vehicles, two-wheelers have started moving up. Tractor sales are seeing good traction. I think that's a very strong one on the automotive side. On the renewable side, you're right, we had the highest again quarter here. We grew at 25% quarter on quarter, YOY in the renewable space. We are expanding, as you know, we are trying to go to non-fossil fuel in JSW Steel by 2030-31. Our effort is to see that we have everything through renewable energy. So we are expanding our capacities on solar and wind ourselves. In addition to that, the renewable energy demand overall in the country, as we require more energy for our own self-reliance, I think that overall in India is growing. Our plate facility at Anjar, our coated facilities are big suppliers to the renewable space, and that is benefiting us overall.
All right, so demand is strong and coming in from new areas as well. But when we talk about pricing, there is a strong support coming in from international prices. EBITDA per ton has been very strong, 23% growth. Is this sustainable? Give us an outlook on the pricing as well.
So the prices, just to come to the price first, the steel prices started improving, if you recall, from Jan 26 onwards. Jan to March quarter, it saw increase in line with what happened globally. Part of that price increase has actually fully flowed on into the Q1 of this year, and that has given us the tailwind price benefit. While during the quarter, the prices did moderate, somewhat in flat, but the secondary market on longs moderated much more. In spite of that, we did deliver a good, I would say, NSR improvement on volume and mix both. Sustainability of the price, I would just like to say that the prices in India are among the lower ones. If you were to compare with many other parts of the world, we feel these prices are reasonable. However, there are seasonal impacts which do come in, as we know, during the July-September monsoon quarter. We should see better traction in terms of demand and prices as we go into H2. But Q2 will see increased volume from JSW Steel, and that from our BF3 Vijayanagar operations and Ohio operations, that would improve our overall absolute EBITDA as we go into the next quarter. It will be very difficult to put a number to what EBITDA or what margin would come next quarter.
All right, so there has been some shutdowns also. So what has been the impact of the war so far? It has only benefited on the price front, but what about the supply chain and also the volume guidance for the next quarter?
So this quarter, actually the last few months have been impacted geopolitically, you're aware. So whatever Impact has been felt with respect to supply chain, with respect to elevated cost of energy, has impacted the cost in Q1, and some part of that flows into Q2 as well. We are hopeful that the Middle East conflict will get settled soon. It's difficult to say when. It remains a key monitorable. If you go into the demand for the full year, one thing good which we see is that the IMF has projected the world economic growth in 2026 to grow at 3%, marginally 0.1%, marginally lower than what they earlier projected. So in spite of the Middle East conflict, I think that's a very resilient number. And they are forecasting that it will improve to 3.4% in calendar year 27. Therefore, I think that's why I'm saying the second half of this year, you will see more traction. We will also see a lot of reconstruction and rebuild in the world as countries recover from the war and start rebuilding infrastructure across various parts of the world. So we feel that the demand in India will be very strong. We expect about 7 to 9% growth. Our estimate is that we would have a demand close to 177 million tons, incremental 12 to 13 million tons. And with our JVML capacities fully playing out this year, BF3, Vijayanagar adding capacity, I think we are very well poised to take advantage of this demand improvement in India.
All right, so very bullish commentary when it comes to H2, but let's really focus on Q2, which is seasonally weak quarter because of monsoons. So how is the raw material prices really putting pressure, or how is the outlook looking and the prices? Give us a guidance for this particular quarter, Mr. Acharya.
So this quarter, we see coking coal prices going up by about $12 to $15 in Q2 versus Q1. That would impact cost to some extent. Coking coal prices have started lowering in the last 2 weeks or so, but major part of that benefit would flow into the subsequent quarter in Q3 of this year. Iron ore prices have also started correcting, which have been elevated for some time. And that also should benefit us towards the later part of Q2 and Q3. Having said that, the impact of pricing is difficult to forecast, but there will be a seasonal impact on prices in the Q2. However, we expect that H2 will be very strong. Our demand growth, as I said, in India is likely to remain robust. With this, we expect stronger volumes to be able to result in higher absolute numbers in terms of EBITDA.
And you are planning to really expand at a scorching pace. GSW1 will be a slight bit of monetization. Putting all together, give us a sense on debt EBITDA and what are the numbers you'll be comfortable with the expansion plan in motion.
So net debt to EBITDA has improved now to 1.46, and we had given our comfort that we would like to be below 2.5 as we grow our capacities. We maintain that direction, and we'll be financially prudent to see that doesn't get disturbed when we grow. Net debt has reduced to 46,000 odd crores from the last quarter. And I think our balance sheet is now quite strong to be able to take advantage of the India growth story and go on our trajectory, which we have already indicated to you. So, hoping for the best as we go ahead.
All right, all the best, Jayant Acharya. Thank you so much for joining us on NDTV Profit. All right, from one quarterly result to another, and now we are talking about Federal Bank, which reported a solid Q1 performance driven by loan growth. And we spoke to Harsh Duggar, the Executive Director of Federal Bank earlier, and to discuss about the quarterly performance. Here's an excerpt of that conversation.
So as we know, Federal Bank has posted a strong set of numbers as well. And what's interesting is the trajectory from here on. Harsh Duggar, Executive Director at Federal Bank, joins in. Mr. Duggar, welcome to the show. Always a pleasure to speak to you. My question is a 15%
Good morning,
loan
and thank
growth.
you, Hiran.
Good morning.
Yeah, hi.
A 15% loan growth in the first quarter. The question is this something which is going to be sustainable in terms of FY27? And if so, which are the segments that will actually drive this incremental growth?
Okay, so this has been a reasonably strong operating quarter for us. And just to give you a little bit of a brief background before I step down into the numbers, this was one of the best quarters in terms of net profit, which grew by 37% year on year. Our NIM grew about 39 basis points, 3.3% at this point in time. Now, when the loan growth, as you mentioned, was at about 15%, we have been guiding that we are looking at mid-teens growth for the current financial year. Some of the segments we are looking very strongly on is the commercial banking, business banking, lab, commercial vehicles, gold loans. These are the segments which we are focusing on. And they will drive the growth as well.
Okay. So you're talking about segments that will drive growth. Now, if you have to talk about the corporate credit growth as well, Mr. Dugar, that has picked up across in terms of the banking segment system, right? Are you seeing adequate risk-adjusted returns in corporates, or will the focus actually shift to retail, MSME, and business banking?
Okay, so to give you a little bit of a background, the gross assets on the corporate banking side crossed the 1 lakh crore mark this quarter, and we do expect a reasonable growth. We've been guiding mid-teens. Corporate banking will be nothing too different. A word of caution over here that we do not look at growth in corporate banking alone. We look at it mixed with viability, which is NIM being protected, and an ROE which is commensurate to what we are looking at, and asset quality, which is something which we're not going to compromise on.
Okay.
So yes, on corporate banking side, we are seeing growth happening, and we are set to leverage on that as well.
Okay. And how big do you think can the gold loan business become? Because that's continued to be a strong growth engine as well. So without creating any concentration risk, how large is that portfolio being aimed at?
So as we speak, we are about 41,500 odd crores in terms of book size, growing at about 33 odd %. This is one of the, as I mentioned, this is one of the key focus areas for us to grow. And to be fair, the industry has also been growing at a significantly good pace. And we are one of the largest banks in this space among the private sector banks. And we are reasonably sure to leverage it because we have the DNA among our branches to handle gold loans. We have a reasonably wide setup of 1,650 odd branches through which we do gold loan. So gold loans is definitely going to be, and it's a segment which has low capital requirements because of gold. It has very low slippages and reasonably high operating margins over there.
Okay. Mr. Dugar, the other conversation is with regards to the net interest margins. Now, earlier, you had guided for a gradual improvement when it comes to the net interest margins as well. We're talking of a number which is 3.3% now, despite the industry-wide pressure that we've seen in terms of margins, so which is, one of the brownie points that Federal has right now. After this stronger than expected Q1, would you then upgrade the guidance with regards to your net interest margins? What is the trajectory going to look like? Because high expectations on that front.
Sometimes having a good quarter also raises the bar a little too much. But let me also tell you that we are still sticking to the same guidance. We have been guiding at 5 to 6 basis points improvement in the NIM quarter on quarter for the current financial year. But let me also caution you over here, this is not going to be necessarily sequential, and it can be non-linear. So which means there will be some quarters which will see a NIM expansion much more than what we were anticipating or planning guiding for. But over the period of year, we will be looking at 5 to 6 basis points. But let me also add, it has a positive bias to it, so we're reasonably confident about it.
Okay. So that's with regards to net interest margins. How about the CASA? We've seen an improvement to over 32%. And this is in a highly competitive deposit environment, right? So what is your plan when it comes to defending the funding cost whilst maintaining the kind of growth that one should be watching out for? Because deposit growth remains a challenge for the sector as a whole.
So the play between growth and margin will always remain. I think this is something which every bank will have to grapple with. But I do see a reasonably good growth in terms of deposits. And I don't think we as a bank would like to buy CASA. We are reasonably good in terms of what we pay. And we are not the highest paying bank for the savings account as well. So the focus will be to grow our CASA. And they are not one, but there are multiple things which we are looking at in terms of how to improve our CASA, increasing the products per customer, more digital penetration, more convenience and more products to the customer is what we are looking at. And we grew about 190 basis points in terms of what we grew the CASA at. And we are reasonably confident to maintain the trajectory. We still not at the levels which we are looking to be at over the medium term, which should be at about 35-36%. So we are seeing a quarter-on-quarter growth in terms of CASA is what we would be guiding.
And you mentioned about the asset quality as well, and I think these are amongst the best levels in years that we've seen in terms of asset quality for a federal bank, right? So should this be viewed as a new normal? Or do you think we are at a cyclical low in terms of credit costs? How are you looking at, this entire gamut? Because there is no visible stress in the MSME and the retail portfolios as well. So which are the segments that you will monitor closely in terms of potential asset quality risk, if anything has to worsen from here on?
So our NNPA was at 18 basis points, a decadal best. Our credit cost was at 41 basis points, and we have been guiding at 50 to 60 basis points in terms of credit cost. While we are not changing our guidance, we have a positive bias, and we feel that it will be at the lower end of the guidance which we have been giving for. The segments which we feel could see a little bit of a heightened stress, or where we would be kind of focusing on, would be on the unsecured portfolio. Personal loan, MFI would be the very clear ones. And also the lower end of the MSME, because that tends to be the more vulnerable segment in the chain. These are the areas which we're going to be watching out for as well closely.
Okay. The other question I have is in terms of FCNRB. Now, you've not disclosed the total inflows overall. So any update that you could give us on that front, and any target you have or any challenges that you're facing? Because some bankers are also saying that inflows may be less than what the street is actually anticipating. So just to get a mood check on that front.
So yeah, okay, so let me give you a background before I give you the futuristic thing. One, we have already put the product in place. We have launched the FCNR Max, which gives the 6th quarter. And we are also offering structured and leverage products to our customer. We have launched. So the return which we are offering to the customers, we have just recently launched it, and we are obviously seeing an uptick in that part. It's too early to comment at this point of time. Yes, the industry was expecting a slightly higher inflow, but there have been challenges in terms of getting leverage for the customer because there are country risk limits as well, which is preventing banks from getting enough and adequate leverage for their customers. So this is where we are at. But like I said, we still have 2.5 months to go to see how it flows out. And industry has been guiding at about $50 billion. And we are looking to gain our fair share in that. We'll be gaining share on that as well.
Okay. My last question, Mr. Duggar, is from an investor perspective. I know you're not going to be talking about valuations, and I shouldn't be asking you that as well. But historically, you have a federal bank which is traded at a discount to your larger private banks as well. So if from an investor perspective, someone has to look at the key catalyst where a federal bank could be a re-rating candidate as well, what would those 2 to 3 metrics be that investors should actually track according to you?
Okay, so the share price in the market cap is something which the market determines. We deliver on the numbers and we guide on the numbers which we are giving, and we try to strengthen our operating performance. But the numbers which obviously the industry is looking at is obviously a NIM guidance, the ROA, the credit growth and the deposit growth rates, and obviously on asset quality. These are the broad parameters which we have been kind of monitored on and looked at, and we are reasonably confident of being at the positive guidance which we have given with a positive bias to it.
Okay, so that was the management of Federal Bank. Absolutely, seeming very positive when you talk about their FY27 guidance and achieving the same as well. And clearly, from a valuation perspective, as we know that Federal is way lower or way cheaper as compared to your larger private banks as well. So that catch-up is going to be interesting to watch out for as well. But another interesting thing that you need to watch out for in terms of NDTV profit, after a pause of 13 years, one of the most prestigious honors in Indian business is back. And this is on the 26th of July, where NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who've not just built successful businesses, but helped shape India's economic journey. Now, this is not just another awards night. The Business Leadership Awards recognize excellence that stands the test of scrutiny. In fact, the NDTV Profit Business Leadership Awards, which is slated on the 26th of July, is a night that recognizes excellence, a platform that celebrates leadership, and a showcase of the businesses shaping India's future. All of us are going to be waiting for that as well, and it's just 6 days to go for the Business Leadership Awards. So stay tuned for that. But we'll quickly slip into a short break and lots more lined up on the other side. We'll have the management of Borosil Renewables will be joining in to discuss their quarterly earnings.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26 July.
Back with India Market Open right here on NDTV Profit. Pull up the markets, and I think, considering the fact that HDFC, Kotak, and Axis are all three in the red and by a margin, I think we're doing reasonably okay. 0.5% is something that you'd settle for after the kind of moves that HDFC Bank in particular is doing and trading at the low point of the day, I would presume. But what Axis and some of the others are doing as well, with oil at 92, I don't think this is a bad outcome really. Let's see how it shapes up during the course of the day. But let's listen into an exclusive NDTV Profit chat with the MeitY Secretary, Mr. S. Krishnan, where he explained the importance of the second phase of India's production-linked incentive scheme.
First and the most recent being the development around the cabinet approval for two schemes roughly worth 2 lakh crore rupees. The larger one being, of course, the Semicon 2.0 that has come out. Sir, talk to us about what learnings we've picked up from the first Semicon and what are we going to implement in the second iteration of this much larger scheme that the government has now come out with?
I think Semicon 1.0, the biggest success was that we were able to establish that India could be a location where advanced manufacturing can take place, particularly of semiconductors. It's the first time that in India, large-scale commercial manufacture of semiconductors is being successfully done. And that actually lends a lot of credibility for India as a location and as a destination for investments in semiconductor manufacture. I think that is significant not just for the country but for the world as such, because it diversifies the supply chain. So that is the first and most important message that I would like to highlight. Further, the need to take an ecosystem-based approach to semiconductors was the other important learning. Third important learning was that, in the design-linked incentive scheme, it is essential to provide larger volume of support, not necessarily as a grant or as a subsidy, but even as investable resources. We need to crowd in more investable resources in order to enable some of these companies to really grow. Otherwise, they would just be absorbed by global entities and other companies, and therefore it's important that we provide them an opportunity to truly grow. So these were the 2 or 3 key learnings which we have brought into Semicon 2.0 in its design itself.
Okay, so that's an interesting conversation with regards to where PLI 2.0 goes and what it would actually mean for sectors as well with the meaty SECI. But moving on, after months of underperformance, now footwear companies are finally putting their best foot forward. A mix of announcements, expectations that has actually brought the sector back into focus. But the question is this rally sustainable? Because valuations are extremely expensive. Sharad joins us with more details. Sharad, an interesting one that you've prepared in terms of where the footwear space goes. It reminds me of Bollywood completely now.
Exactly, and of course there is a saying, "Jute do profit do." Why? Because of the footwear stocks. Are they ready for a good technical up move? And of course, I'm also wearing my favorite sneakers, but I'm going to give you the entire picture about where the footwear stocks are there. 5 reasons why they are rallying. The footwear stocks have risen between 5 to 20% from July lows, and after a really long time, they have become a topic of discussion. So I've dug deep into the key reasons why footwear stocks will be there in a positive momentum. Smart money, volume-based buying we saw last weekend on Thursday and Friday. GST rate cut benefits might start playing out now, especially on the footwear side. Looking at the Q1 numbers, a strong Q1 is expected, and I'll give you the reasons in a while. Also, there are 2 other reasons you should note. DPIT has extended the legacy stock clearance time. That's positive for the footwear stocks. And of course, there is a technical reversal at play and benefits of tariffs also coming in. So these are the 5 reasons which you should be focusing on. But how does the valuation stacks? Bata is at 52 times, Metro Brand still expensive, almost 74 times. Relaxo and Campus also is there, where the focus is there. Apart from the valuations, let's look at how the movement has happened of the stocks, and we see largely good up move has happened from the last weekend, and these are the numbers. Look at Relaxo Footwear, that is up almost 21%. So definitely the interest is there in this street for footwear stocks. Apart from this, apart from the moves and the valuations, the Q1 expectation, this is very much important. The demand remains healthy here, and Adhik Maas impact especially happened for apparels, not so much for footwear. There's a continued premiumization at play leading to a margin expansion. That is where the street is bullish on, especially on the higher average selling prices. Calibrated price hikes are already taken, and the expansion across the retail and the digital channels, that's where the strategy is also moving for the larger footwear players. So that is why street is quite bullish in this theme, and after a really long time. But remember, there are some risks also. More competition, there is a changing trends and preferences. If you look at it, valuations are still frothy, and store expansion may still put in pressure on the financials as a whole. So this is the entire picture for the footwear stocks, and who knows, there might be a good technical reversal at play.
Let's wait and watch. Thanks so much for that, Sharad. Well, if a football World Cup can do something to footwear and sneakers, let's wait and watch. But speaking of results, Borosil Renewables delivered a strong quarter, returning to profitability, or showing profitability in this quarter, if you will. Stronger realization, sharp margin expansion led by price hikes, presumably, and fresh capacity coming on stream as well. Let's get in the management to speak about what is slated up ahead. Mr. Pradeep Kumar Kheruka, Chairman of Borosil Renewables, with us on the show. Thanks, Mr. Kheruka. Thanks so much for joining in. How would you put the quarter into perspective, considering that the sector is going through a series of developments, which to somebody who's analyzing the sector makes predicting or forecasting what happens in the next 1 year extremely difficult. So in light of that, how would you say FY27 has started off for you?
FY27 has started well on a strong note, I would say. The government policy is very strongly pro-renewables, and they are welcoming people into setting up renewable capacities of their own. Our own company, Borosil Renewables, for instance, in the first quarter of this year, 93% of our electrical energy has been met from renewable sources. We ourselves are on renewable sources.
And this is a story being repeated across industry around the country. And so therefore, quite in addition to what the government is doing in terms of adding capacity to the grid, these are private players who emerge and certainly want to set up their own renewable energy. And all of this is pointing to a very strong sentiment in the market. We have, of course, been at full production. The prices have stabilized. We have had, of course, a few ups and downs in the quarter because of prices of oil and gas fluctuating. But that's all, I suppose, par for the course, because we do have, there's uncertainty in every breath that we take, and we cannot be an exception to this universal rule. So yes, the portents are very good.
Okay, so Mr. Kheruka, good morning. This is Hiral on this side. A two-part question that I have is the revenue growth that you've seen, how much of it is driven by, say, realizations versus the volume growth, number one? And two, the margins have been on the stronger side for several quarters now. So is this going to be sustainable if solar glass prices soften in the coming quarters?
So the way the outlook seems to be today is that the demand remains very strong. That's one. Secondly, we have an anti-dumping duty in place, which is very much there, and so therefore prices appear to be fairly stable so far as import prices are concerned. The only the only shadow, as it were, was there's been a policy announcement recently which had made it mandatory for module manufacturers to use domestic cells, and there was a bit of a shortage of domestic cells. So some manufacturers of modules had cut back, but this does not affect us because what is being cut back is imports and not domestic production. So we continue to sell, but this is only to give you a complete picture. So I'm told that there's going to be some rethink on this policy, and there might be an extension of 6 months. I'm referring now to cells. So far as glass is concerned, of course, there is the prices seem stable, the supply is stable. We see new manufacturers coming into the fray during the next half of the year, which is from July to December. And we do expect that most of this glass will be used by them for their own self-consumption, except for Vishakha Glass, who will be supplying into the market partly and partly for consumption by their partner. So all the portents are very good.
Mr. Kheruka, sorry, just on that, because we're going to be talking to Vari and then Premier immediately after your conversation as well. This ALMM2 extension, the management seem to believe that because some of the capacities, and because the extension is just for 6 months, the existing capacities having booked, it is not a big hit per se. I was thinking that the government would give an extension for making a difference to the situation as it stands right now, right? What are your views on that development?
My views are that the government has eased the situation for module manufacturers, and this extension will help them to make sure that the tempo of module production is not lost. That's how I understand it. So I have to study it in detail. I do not see that this is in any way an adverse thing. It's just good for the whole industry. That's how I see it. And of course, as soon as more capacity of domestic cells is available in the market, because it's not just enough to say that we've started production. It's important that the quality being produced is up to the demand of the customers. So yeah, that is what it is.
Mr. Kheruka, talk to us about that capacity expansion, because you've lined up 950 crore rupees to expand that capacity. What is the kind of return that you're expecting on this? You must have a benchmark for that. And how much of the new capacity is already backed up by customer demand and visibility of orders?
There is plenty of demand. So in terms of the new capacity coming up, there is no question of having to having to negotiate with anybody or having to pre-sell it to anybody. We will do that as a matter of good governance. But I'm sorry that I'm sure that that is never going to be a problem for the new capacity. Regarding margins, the margins should be good, similar to what we have now, and we should have no problem with that at all. So similar margins.
So as I understand it, by December 2026, we're talking about a full commissioning, right? And so, as things stand right now, based on what you have, what is the utilization, and where do you anticipate taking it to the end by the end of the financial year?
Well, actually, December 26 is more an internal kind of a benchmark. But as far as publicly, we have mentioned that we should be having lit up both furnaces by the end of this financial year, which is March 27. So by March 27, both the furnaces should have been lit up. And once they are lit up, the protocol is to say that there will be a gradual ramp up of capacity. The practice has been that the ramp up of capacity has been quite rapid. And we may very well be in full production of 300 tons per day from each of the furnaces in the first quarter of the next financial year, which is April to June 27.
Mr. Kheruka, my question to you is, we're talking about higher realizations, we're talking about volume growth, we're talking about volume growth coming in from new capacities as well, and there is industry policy support that is coming your way.
Yeah.
If FY27 turns out to be a record year for Borosil Renewables, what are the key drivers out of these that you will be watching out for? And two, for the growth that you need to achieve, is there any further fundraise that you will look at over the next 12 to 18 months? Because you've already raised funds, you've already expanded by now.
So we do not expect any further fundraise for sure. And we if things go according to plan, we should have a good next year. And there is everything is looking good. The only thing that remains to be done is to see what next for the company, which we feel is a bit premature now. And when we get into production, I think we will devote our full energy into that. But we do like to take it easy. We like to make sure that we consolidate expansion. We have expanded a lot in the last few years. And it's very important that we consolidate. We should be able to manufacture the entire quantity properly and with good governance. So that's very important for us.
Okay. Mr. Kheruka, just 10 seconds though, if you can. Are you at any point of time thinking of selling some part or some of the promoter's stake to a third party now or in the next 12 months?
I've been advised to say no comment to that by my people.
The street may take it differently, Mr. Kheruka, because if a promoter is not wanting to sell, the promoter will say a categorical no.
Yeah. Well, this is what I've been advised. My real feelings are not being expressed here.
All the best. All the best, Mr.
All the best,
Thank
Mr.
you so much
Kheruka.
for joining today and giving us your thoughts. Well, interesting answer.
Yeah.
But great. I mean, good path to FY27. Let's see. But in fact, as he invoked a particular part of that conversation, which is around the ALMM2 extension, Wari is in focus. It's commissioned a best container facility, and also the ALMM2 exemptions hurt the stock, but it's recovered a little bit of lost ground right now. Before we bring in the management chat, let's get in a quick perspective from Varsha. Varsha.
Well, thank you so much for that. There are two news, of course, floating around. One is they've started BESS container manufacturing facility, which marks first milestone in its 20 gigawatt energy storage roadmap, and this is part of Wari Energy strategies to build a domestic storage ecosystem. The container facility capacity is around 5.15 gigawatt hours, which has been upgraded from originally planned at 3.5 gigawatt hour. This is all about battery energy storage system. But the other news which is in focus is extension of ALMM part 2. Now MNRE has extended ALMM 2 exemption till December 31st 2026 from May 31st 2026, and there is no blanket extension for all solar projects. Overall, ALMM policy remains unchanged. And now why the extension? Because domestic solar cell supply is still insufficient and helps avoid project delays and cost escalation, and hence you're seeing Waaree Energies, Premier Energies, all the cells and module manufacturers having an impact when it comes to their stock price.
First the industry news, then the company news, Abhishek. I want to start off with this ALMM2 developments that have happened. This extension that is given, the belief on the street is that if this extension would not have come, and therefore the guidelines would have come in, it would have been beneficial for companies like yours and some of the others in margins for this intermediate period of 6 months, which is July to December. Now that it's been extended till December, maybe for FY27, basis the estimates that people had, there might be a bit of a margin hit. Would that be a fair assessment?
First of all, good morning and thank you so much for having me on the show. On the extension of ALMM, I think to understand this, we have to first see which framework has been approved under the extension notification day before. The current extension only circumvents around the C&I demand, the very limited next 6 month window for those projects which are either captive or which have some few connectivity approvals. So it's not a blanket approval, first of all. It does not extend to all the projects unanimously. It just extends to the particular window. Second, in terms of the impact on Waaree, if you look at our total capacity of manufacturing of modules, right now it stands at around 25 gigawatt. 24 gigawatt is in India and the rest is in the US. Against this, our cell capacity today is 5.4 gigawatt. While we are adding another 10 gigawatt of cell capacity over next 6 months of time, but it will take another 5-6 months of time for that.
तो बहुत ही प्रोडक्टिव होते हैं। और दोनों को प्रोडक्टिव होते हैं तो देश का कल्याण होता है, जीव मात्र का कल्याण होता है। और इसलिए हम यही प्रार्थना करते हैं कि मॉनसून भी प्रोएक्टिव रहे, मॉनसून सत्र भी प्रोडक्टिव रहे। साथियों, पिछले 1 महीने में देश ने अनेक सिद्धियां प्राप्त की है और देशवासी गर्व से भर जाए, इस प्रकार की सिद्धियों का सिलसिला चला है। चाहे राष्ट्रीय हो, अंतर्राष्ट्रीय हो और अब तो अंतरिक्ष भी हो। एक प्रकार से भारत के लिए गर्व के पल रहे हैं। पिछले वर्ष मॉनसून सत्र के ठीक पहले भारतीय नागरिक इंटरनेशनल स्पेस स्टेशन पर पहुंचा था और कल ही परसों भारत का एक युवा स्टार्टअप, उसने बहुत बड़ी सिद्धि प्राप्त की है। विश्व के कम ही देश हैं जहां इस प्रकार से प्राइवेट साहस हुए हैं और भारत के युवाओं ने अंतरिक्ष में नई उड़ान भरी है। बहुत बड़ी सफलता है। और ये जो स्काईरूट स्टार्टअप है, उसमें जो नौजवान काम कर रहे हैं, मुझे बताया गया उनकी पूरी टीम की जो एवरेज एज है वो सिर्फ 28 साल है। ऐसे नौजवानों ने ये काम करके दिखाया है। मैं किसी 56 साल के नौजवान की बात नहीं कर रहा हूं। मैं देश के ये स्टार्टअप ने 28 के एवरेज वाले नौजवानों ने अंतरिक्ष में भारत का झंडा गाड़ दिया है, उनको तो बधाई है ही है। लेकिन ऐसी बातें जो हैं, जो भारत को आत्मविश्वास से भर देती है, विश्व में भारत का प्रोफाइल सर्वमान्य सर्वस्वीकृत बनता जाता है। साथियों, ये संयोग नहीं, ये एक संदेश है और बड़ा मजबूत संदेश है कि हमारे देश के युवाओं की क्षमता और उनकी आकांक्षा अंतरिक्ष जितनी असीम है, इससे बड़ा संदेश देश के लिए कोई और प्रेरणा नहीं दे सकता है। साथियों, जो रिफॉर्म एक्सप्रेस पर सवार होकर के आज देश चल पड़ा है, उसी का नतीजा है कि भारत के नौजवान इतना बड़ा साहस कर पाते हैं और सफल भी हो रहे हैं। साथियों, पिछले दिनों राजस्थान में बहुत बड़ी ऑयल रिफाइनरी देश को समर्पित की गई। पिछले कुछ सप्ताह पहले एक सेमीकंडक्टर प्लांट यानी तीसरा देश को समर्पित किया गया। अभी कुछ दिन पहले ग्रीन हाइड्रोजन से चलने वाली ट्रेन, और विश्व में बहुत कम देश ऐसे हैं कि जिनके पास ये सुविधा है। लेकिन भारत ने जो हाइड्रोजन ट्रेन देशवासियों को समर्पित की है, वो सबसे ताकतवर इंजन वाली है और सबसे लंबी है। ये अपने आप में भारत के वैज्ञानिक, भारत के इंजीनियर्स, भारत के इनोवेटर्स, भारत के उद्यमी, भारत के श्रमिक, ये जो एक लक्ष्य लेकर के देश के लिए जी रहे हैं, देश के लिए काम कर रहे हैं, उसी का परिणाम है। साथियों, हम भली भांति जानते हैं और पूरी दुनिया चिंतित भी है, लगातार कहीं न कहीं युद्ध की स्थितियां बनती रही है। पश्चिम एशिया के युद्ध के कारण भारत जैसे देश जो एनर्जी के लिए औरों पर डिपेंडेंट है, उनके लिए ये पश्चिम एशिया का युद्ध एक बहुत ही बड़ा संकट का कारण रहा। पेट्रोल, डीजल, एलपीजी, फर्टिलाइजर, केमिकल्स, यानी हर विषय में अनेक बाधाएं, अनेक संकट आए। उसके बावजूद भी भारत 7.7% के ग्रोथ से दुनिया की मेजर इकोनॉमी में सबसे तेज गति से आगे बढ़ने वाला देश बन के रहा। ये भारत के सामर्थ्य का परिचायक है। भारत किस प्रकार से उत्साह और उमंग के साथ नई ऊंचाइयों को पार करना चाहता है, उसकी इसमें एक झलक है। और ऐसे में जब ये मॉनसून सत्र आरंभ हो रहा है, देश ने स्पीड पकड़ ली है और संसद का स्पिरिट उस स्पीड में नई ऊर्जा भर सकता है। सकारात्मक स्पिरिट राष्ट्र के लक्ष्यों को प्राप्त करने के लिए बहुत आवश्यक होता है। हमारे सदन में बहुत अनुभवी सांसद भी है, दल उनका कोई भी हो, लेकिन उनके पास एक लंबा अनुभव है। ऐसे समय में उनके अनुभव की, उनके ज्ञान की संसद को भी जरूरत है, देश को भी जरूरत है। और इसके लिए संसद का चलना, सार्थक चर्चा होना, मिलजुल करके देश को आगे ले जाने के संकल्प लेना, ये मैं समझता हूं कि बहुत ही समय की मांग है। एस्पिरेशन से भरे हुए देश के युवाओं की मांग है कि हम आगे बढ़े। आज समय की मांग है कि राष्ट्र निष्ठा से भरे हुए, राष्ट्र भक्ति के लिए जी रहे आवाज को सदन में उचित मंच मिलता रहे, वे अपनी आवाज को बुलंद करें, देश को दिशा दे। और इसलिए मैं आशा करता हूं और मुझे पक्का विश्वास है, जहां तथ्य होते हैं, जहां तर्क होते हैं, वहां तूफान के लिए जगह नहीं होती है। अगर तर्क मजबूत है, तथ्य मजबूत है, तो शांत चित्त से भी अपनी आवाज को बुलंद बनाया जा सकता है। मैं आशा करता हूं तर्क और तथ्य के साथ सदन की चर्चा को समृद्ध किया जाए, हर आवाज को अवसर मिले, हर विचार को सम्मान मिले। ये संसद की हमारी भूमिका है। मैं सभी सांसदों से बढ़ चढ़ करके इस सदन में हिस्सा लेने के लिए निमंत्रित करता हूं। आज सुबह स्पीकर महोदय जी ने भी सोशल मीडिया के माध्यम से देश के सांसदों का स्वागत करने के अपने भाव को व्यक्त किया है। मैं भी उसमें अपना स्वर मिलाता हूं। आप सबका बहुत बहुत धन्यवाद। नमस्कार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from me, Sharad Dubey. And let's take a look at the top headlines. Bitcoin above the support levels of $64,500 levels on consolidation. US Bitcoin ETFs extend inflow streak, adding almost $136 million of inflows. And South Korea proposes classifying crypto in national assets. Lastly, SFTC chair Mike Selig says US has become global crypto capital. Looking at the Bitcoin levels, there is a support coming in of almost $64,500 on the consolidation. Now, range-bound move is expected as the geopolitical tensions continue to rise, but there is a little rotation happening from the bitcoins to the altcoins, which is underway right now. The US Bitcoin ETFs have extended their inflow streak. BlackRock's iShares Bitcoin Trust EBIT ETF has posted net creations. Now that's attracting roughly $136 million of inflows, and the Bitcoin ETF assets have risen about $77.7 billion. Also, South Korea's proposed National Asset Basic Law would formally recognize the virtual assets. This includes, of course, crypto as national assets. Now, with this, there is a real impact contingent on legislative approval and detailed implementation. This also provides better regulatory clarity for the crypto investors. And lastly, Commodity Futures Trading Commission, which is called CFTC in crypto parlance, the chairperson Mike Selig has stated that the United States has become the global crypto capital just 1 year after the Genius Act. Now, the Genius Act is nothing but guiding and establishing national innovation for US Stablecoins Act, now which has become a law last year. He credited US President Donald Trump and Senator Bill Hagerty for leadership that helped achieve this goal. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, if you look at it, there is a minor correction in Bitcoin, but the money or the volumes have shifted to the other coins, altcoins also. This includes Ethereum, Solana, Tron, slightly up going ahead, but a very tight support and resistance range between that $63,000 to $66,000 mark when it comes to Bitcoin. Now let's look at the crypto strategy for the day. Here's what's there to keep in mind for you. The sentiment is shifting from fear to optimism, but it's going to be a range-bound reaction, especially for Bitcoin, because we are seeing some movement happening in the altcoins, the range which we discussed between that $63,000 to $66,000. But remember, there are two triggers which you should be tracking. The first is the geopolitical tensions, how that is developing, and the Clarity Act. That also remains a key trigger. Now, the rise in the open interest, if and when it happens, they may trigger a fresh breakout going ahead as well, because the ETF flow support is there right now in Bitcoin as well. So as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Soumit Sarkar. And over the next hour or so, we'll try and solve all those stock-related queries. To do, start sending them in on the numbers that are flashing on the top of your screen right now. You can also call us, speak to our guest on those stock-related queries as well. The landline number for that is flashing up there too. But as we go through the day, you've seen two bouts on the Nifty 50 of buying from the lows, and that's something that we'll continue to monitor as we are almost 100 points down on the index today. If you also look at the heat map, it's largely dominated by the banking names as well. So pull up the heat map there, and HDFC Bank as well as Kotak Mahindra Bank and Axis Bank, those are the three ones that are the top losers for today on the back of quarterly results. You had ICICI as one of the top gainers at the start of the trading session, but that has also fizzled out. So Trent, NTPC and JSW Steel are the ones that are doing well in trade. In terms of the sectoral heat map though, the Bank Nifty and the Nifty Bank, Private Financial Banking Index, the PSU Banking Index, all three will be in focus today. And we monitor all of those. You're seeing the downtick on the Private Bank Index down 2.2%. The Nifty Bank down 1.3% at this point of time, and you're seeing a big move with the PSU Banking Index as a top gainer for trade. So you're seeing that divergence between all of the private as well as the public sector banks today.
The advance decline ratio is the other interesting one. Over the last week or so, has been converging, and largely the declines have been, having a bigger impact compared to the advances. Today as well, they have converged through, but the advances at this point of time is at the top right now. And in terms of the final individual names as well, the BSE 500, there too you're seeing some moves coming through on the BSE 500, but in terms of Aegis Logistics, that's up 5.5%, Supreme Petro, GE Shipping, some of the other ones that are doing well, but in terms of the losers, you're seeing that impact on the banking names, and India Cement, that's also reacting on the back of results as well. You have the big UltraTech numbers coming in today, so that will be in focus as well. But let's welcome in our guest now, Gaurav Sharma, Vice President and Head of Research at Globe Capital, and Saurabh Jain, Equity Head Research at SMC Global Securities, joining in as well. Gentlemen, both of you, thanks so much for joining in. And the first query, and a lot of those which are coming in on result reaction today, this one's coming in on Reliance. Sunil from Vizag is holding shares at 1300 and wants to know what he should do with his almost 100 shares that he's holding. Can he continue to hold for the long term? Saurabh, good morning. What did you make of the results? Because largely a good set of numbers, right? And we've seen that the stock react as well. Should he continue to hold?
Good morning, Pradeep. Good morning, Mark. See, in my opinion, I think Reliance it makes sense to hold Reliance because, the results were better than the expectations. Some segments have grown above expectation. It is the first time that the Reliance has clocked more than 3 lakh crore in quarterly revenue. As far as valuation is considered, it is trading at the lower end, in my opinion. And I think from the long-term perspective, I think things will move, up in various segments. So as of now, it is under pressure, but for the long term, I think it is a hold.
The next query is coming in from Madhav. It's on Union Bank. He's holding 1,928 shares, bought at a price of 172.16. Can he hold for short term? Gaurav, any view on this?
Hi, Somit. A very good morning to you. Yes, he can hold on to the position. PSU banks are performing well. Union Bank has posted good set of numbers, so have PNB. It has actually set the tone. Further up move towards 178 in the immediate near term, followed by 185 odd levels can be expected for Union Bank.
Got that view, Gaurav, but and welcome to the show. The next question coming in, and this one's on the other banking name, right? HDFC Bank stocks are down almost 4% today. Our viewer is asking, if it's a good time to average out. He's holding shares at 745, asking, and this is Sanjay from Bengaluru. Saurabh, the results definitely disappointed the street, but would you recommend, Sanjay, if firstly he should add more shares, and if this is a good time, because we've seen that consolidation for a really long time at that 740 odd level. So do you think if it's a good time to add more if someone wants to add, or should he wait for some further correction?
I think it will take bank will take some more time, maybe few quarters to claw back to its historical, normal net interest margin. And in fact, the business growth is even weaker than the industry growth and then its peers. If you look at the Axis Bank, ICICI Bank, the business growth was quite better as compared to the HDFC Bank. Since holding HDFC Bank, I will not recommend to add more, but certainly private bank space looks good to me. And in that space, I would recommend him to add ICICI Bank in his portfolio.
Next query is coming in from Saurabh. It's on delivery. He's holding a few shares of delivery, bought at a price of 787. He wants to know the target for the next few days. The buying price seems to be quite high compared to the current market price here. Gaurav, any view here?
Somit, a bit of reversal is likely in the stock. It has corrected reasonably from its recent peak of 524. So a reversal toward 500, 510 can be expected in the immediate near term. As the query is just limited for a couple of days, I think 505 to 510 is the upside target that I'm eyeing at. Stop loss should be maintained at 465.
65 on delivery, got that view. But let's also take our first caller for today. This one's from Hyderabad. Chaitra has a stock query fast. Chaitra, good morning. What's your query?
Hello.
Yeah, hi Chaitra, we can hear you. Go ahead.
Yeah. Hi, Puneet. Good morning. My query is regarding the Aether Energy.
Okay.
I'm holding 40 shares at average price of 986. I partially booked some profit recently. I'm holding the rest of them. I want to know whether I can add more at these levels or should I hold it at simply like that.
Got it, Chaitra. Firstly, a good one, Chaitra, and congratulations for buying it. The trade was Saurabh. Would you recommend adding more at the current valuation? I think stocks up almost 3-4 times from its IPO price in just the last year or so. Would you recommend that, or should Chaitra just continue to hold her 40 shares?
See, if you look at the financials, the company is still bleeding. I mean, the company is in net loss, and if you sees the valuation, I think it is close, trading close to 20 times to book value. And with 50,000 odd market cap, 1,000 crore of revenue, I think it is, frankly speaking, it is too expensive. And even if the things are going to not turn around for the company, then also, in my opinion, I think the stock price are already reflecting the future forward earnings. So in my opinion, I think it is the best time to take some money off the table rather than investing more.
Next query is coming in from Ram from Hyderabad. It's on Kotak Mahindra Bank. He's holding shares of 150 shares at 349 price. Should he hold or exit? Saurabh, any view on Kotak Mahindra Bank?
There's been a pressure on the net interest margin, as we have seen after the quarterly earnings, and that is what happened with the Axis Bank too. Market is probably looking how this net interest margin correction can be, gets corrected in the future, and that is the reaction which is coming today. I think the best place to hide in the private space looks to me is ICICI Bank only. In my opinion, I think if you want to invest, go with ICICI.
It's been something I've been recommending on the show as well, Saurabh, for a while now, and definitely good set of earnings for the company. You're seeing again a 1% uptick on the counter now, so that continues to be buying from the lows. But the next question is on Techno Electric. Our viewers holding shares at 1183, holding 50 odd shares. Saurabh, largely post quarter four, stocks been in this range after that big fall. Should Harish continue to hold, and what can he expect from this quarter?
I think it is good to wait for this quarterly earnings, and after the correction in the last few quarters, now the stock is trading around 2 times to book value and 24 times to trailing earnings. I think it is good to, because it is an interesting space, I think, and it is a very old company. They have the management, and the company has many a times have beaten the expectations on the earnings sides. I think after taking cognizance of the June quarter earnings, then take a call.
Next query is coming in. Okay. The next is a caller query coming in from Andhra Pradesh. Mahesh, you can go ahead and ask your query.
Okay. Actually, I bought Kalyan Jewellers stocks at the price of 524.
Okay.
3,200 quantity. Can I hold or can I exit, or is there anything else? Please let me know.
Mahesh, for short term or long term?
For short term, it's 6 months.
Okay. Gaurav, any view on Kalyan Jewellers from next 6 months perspective?
The stock has rallied too very much in a very short span of time. First of all, he should take some profits off the table, as he's having reasonable quantity and he's making some decent profits as well. For the remaining, it is better to hold on with a stop at 520 and look for targets closer to somewhere close to 610.
610, got it. Well, the next counter that's in focus is Biocon. Venkat, who's from Hyderabad, wants to buy into this counter. Gaurav, I'll stick with you because, after a really long time, we've seen that 400 rupee mark being breached. Is this move expected to continue? How are you looking at the stock now?
It is pretty much likely that the stock would perform better now. A long consolidation seems to be ending, and for the better only. It has posted a fresh round of a breakout. It is better to hold on to the long position. Do take a stop at 420. for a shorter term basis. If our viewer can hold it for a little longer, I think this stock has a reasonable potential to even surpass 475 480 zone.
Right, the next query is on Infosys. Murthy from Bangalore has bought 100 shares at a price of 1,130. Saurabh, should he continue to hold this counter for long term?
I think difficult to take a call on the Infosys, but yes, some companies have surprised positively in the IT space, though we are underweight and we are not recommending as such to invest in the IT space. But since if you wish to invest, I think HCL Tech and Tech Mahindra are the two stocks which we like.
You also have earnings from Infosys this week, and it's going to be a crucial one, definitely in terms of numbers, also in terms of commentary too. So a good reaction on Tech Mahindra post results, but that's something to watch, as Saurabh mentioned as well. But Ashok Pai from Mangalore wants a short-term view on Medi Assist Healthcare. If you can pull up that counter, and Gaurav, what are you looking at this point of time, right? Because we've seen a sideways consolidation over this past month as well as the year. It's almost down 22%. But is there any up move visible in sight?
I still don't see any comfort in this stock. Very rightly said, it is trading sideways from quite some time now. Lackluster moves, indecisive candlesticks, no strength at all. I'll rather prefer taking a bet once the stock surpasses 400, 410 zone. Then only it will hit the breakout mark and a potential up move towards 450, 460 odd levels is possible. Until then, it is a clear-cut avoid from my side.
Next query is from Pravin from Pune. He is holding 2,400 shares of Indian Oil Corporation, that is IOCL, bought at an average price of 90 rupees. What's the view for the next 1 year on this counter, Saurabh? Indian Oil Corporation, should he continue to hold or book profits?
See, the way geopolitics situation is planning out and the crude has already started moving up close to $90, and seems this will be a longer battle. Initially, when it started in the month, towards the end of February, it was perceived it will go for 6 weeks or 8 weeks. Now we are seeing what is happening. I think the higher crude prices will be detrimental for companies like IOC because of the cost burden. So in my opinion, I think he has invested at a good price. Better take money off the table.
Got that view. But viewers as well as Saurabh and Gaurav, let's start the rapid fire round on this edition of the show. You both know the drill. The first question on Patanjali. Nala Murthy has been holding since the IPO at 156 odd. Saurabh, given what we've seen in terms of volatility, would you recommend him to exit or should he continue to hold?
Since he's a long-term investor, I will recommend to hold.
Next query is for you, Gaurav. It's on GAIL. Chetan wants to know the short-term view on GAIL. He's holding 105 shares, bought at a price of 189.
Hold GAIL with a stop at 165. Look for targets close to 180, 185 zone.
Also on MCX, Gaurav, a viewer, Srinivas has bought these shares at 2,900 odd, asking a 6 to 9 month view for his 500 shares.
Utilize any dip to add position till the point stock is holding above 2,400 levels. It is in a sweeter spot. As of now, it is a clear-cut hold.
The next query is for you, Saurabh. It's on Bharat Dynamics. Lalita from Chennai is holding 450 shares, bought at a price of 450 rupees. Should she continue to hold or sell?
If you are for long term, keep on holding.
The next one's from Murthy from Vizag. He wants to enter JK Tyres for the long term. Saurabh, should he wait for Q1 results? We've seen, CEAT reacting very negatively to those earnings misses. What's your view?
Absolutely right. Cost pressure will be seen. Better to wait.
The next query is for you, Saurabh. It's on ITC Hotel. Suman from Kolkata is holding 401 shares, bought at an average price of 177. Should he exit or hold for long term?
Hold for long term.
The next one's on HG Infra. Raja has actually bought it at very elevated levels at 1,488. So he's sitting on massive losses. Saurabh, should he just continue to hold right now or average down?
Don't average, but hold.
The next query is for you, Gaurav. It's on Axis Bank. Amrut wants to know whether should he buy Axis Bank at current levels?
Better to wait for some more time. Further decline toward 20 odd levels is pretty much possible.
Arcade Developers bought at 132, Gaurav, by Ramesh. He wants to know if he should still continue to hold this counter. I know a smaller name, but any view?
Better to exit. It is too small, trades at very low volumes.
Next query is for you, Saurabh. It's on Azad Engineering. Sankara Narayan wants to know whether should he invest in this counter from long-term perspective.
Elevated valuation, buy in a staggered manner.
Got it. The next one's on KPI Green. Is it a right time to invest for the short term? Gaurav, would you recommend that?
One can consider buy in a staggered manner, add once the stock surpasses 420, 425 zone.
Next query is for you, Saurabh. It's on Gabriel India. Malika is holding few shares of Gabriel, bought at a price of 360. Should she hold or book profits?
Hold for long term.
The next one's from Raghu from Bengaluru. He exited Dixon in the green, but wants to know if it's a good time to re-enter. Saurabh, would you recommend that? There's been a very sharp up move from the lows. What's your view?
Avoid.
The next query is for you, Saurabh. It's on Campus Activewear. The viewer is holding 1500 shares, bought at a price of 257. Currently sitting on a loss. Should he continue to hold or exit?
Hold till Diwali.